Hello, everybody, and welcome to our office hours. Um, my name is Lise Murphy. I'm the Director of Marketing and Communications at PCX, and this is the second of our two Q&A sessions or office hour sessions. We know with the May 31st deadlines coming up, um, everybody's scrambling this week to get their reports in, some more than others, and we wanted to offer up our expertise in case anybody had any last minute issues or roadblocks or urgent questions that they needed to answer in order to get their reports done. So this is your show. You know, as college professors always used to say, there's no such thing as a stupid question. And if you are thinking it, it's likely someone else has the same question. So don't be shy. The way to ask your questions is in the Q&A button at the bottom. Just click on that, type in your question. If you're feeling super shy, you can ask anonymously. That's totally fine. And we will do our best to answer all your questions. This is a tight slot, just 30 minutes. So start typing your questions in. You can have more than one, it's totally fine. And here to answer your questions is my colleague Russell Davis, who I'll give a brief introduction to. He is our resident, well, one of our resident EPR gurus. He is familiar with extended producer responsibility globally, really, but right now he's focusing on the US for us. Russell is a graduate of Darden. He has an MBA from there. He worked at the Boston Consulting Group for a while, and then he followed his heart into sustainability, where he worked with the McDonough Group, trying to advance circularity for many years before we had the privilege of having him join PCX, where he is he's the head of product and services for PCX. So if he can't answer your question on EPR, I don't know who can. So again, don't be shy. For those of you who are just joining, please type your questions into the Q&A, either under your own name or anonymously. And without further ado, I'm going to pass it over to my colleague, Russell.
Cool. Thanks, Lucy or Lise. So sorry. So funny. Um, yeah, we already see some questions coming in. Keep them coming. I mean, I've got slides if we need slides to talk about things, but really ask the questions you've got, and we'll get into it. So I see a question here about. Let me read it. How can manufacturers that send material to California for converters prepare for reporting in 2026? Um, I would ask that the person who asked this question to be a little more specific on what they mean. Is this like raw material that's going to a plastic converter to make a finished good, or like I don't know exactly what you mean by that. Um, and then so I'll come back to that one. And I see another question. Are producers expected to have proof of source reduction in the last few years since 23? That one's pretty straightforward. The answer is not really. When you go to report, if you haven't already, because the reporting deadline is May 31st, um, there's a few reports due for California. For those on the call, this source reduction question is only relevant to California. It's the only state that has a source reduction law. And when you go to report, there is a report that's for your annual supply for 2025. Your 2026 report does your 2025 supply. And then there's also a annual source reduction report that you have to do. So this question is about, do you have to have proof of source reduction in the last few years since 23? Um, when you go to your annual source reduction report, you need to submit the total pounds that you reduced, if you reduced anything, through the pathways that CAA has identified, and they're listed out. There's like a box for each pathway when you go to do it. Um, and you would say how many pounds, and then you have to describe what you did. Um, but there's not a specific methodology in place where you need to have an audit firm come in and certify that you did in fact replace your plastic bags with paper bags or whatever change you're making. Um, so no, there's not an explicit proof of source reduction, but the big numbers on that source reduction report are your baseline supply in 23 and your current year supply. And that reporting firm will calculate like if you had a reduction or you did not have a reduction. So I think that answers that one.
Okay, we have another question coming in here, Russell, which is if we do not have data for 2023 year, both sales and transport as a baseline, is there a problem using 2024 data instead if we indicate this in the methodology?
I don't think so. I think you can do that. CAA has been super flexible on the methodologies they can use. That's why they don't prescribe a specific one. Um, I would do in that case is use your 2024 data and write in the methodology, like because of systems changes or we lost access to the data or whatever it is, we don't have this data, but we did have our weights and measures for 2024, and then we've adjusted that back to 2023 because we did know that sales went up or down by 10%, or we have another um, metric that is known that would allow you to make that adjustment. Um, yeah, I think that is acceptable. I mean, you've got to report on something, and that seems like a pretty close proxy.
Okay, moving on to the next question. Um, how can manufacturers that send material to California, whoops, I lost it. How can manufacturers that send material to California for converters prepare for reporting in 2026? And
Oh,
does that make sense to you, Russell?
it sort of made sense, and I asked for some clarification. So the person who asked that came back and said to specify sending rolls of plastic material for converters to transform into packaging, meaning the packaging is being reported is transportation material, pallets, shrink wrap. And this question was about California. And
Okay.
so that is a material that's in scope. If it's being used with as a single use packaging that's going into California, it would be in scope. Um, Sending rolls of materials for converters to transform into plastic packaging. I think in this case, you would want to think about who the producer is. Because if you are the converter and you own the converter, and then the converter is selling that plastic packaging with a product, then you'd be the producer in that case. But if you're selling it to another company, it's like a raw industrial input that then goes and they make plastic packaging out of it. I don't think you would be the producer in that case. That's something you definitely need to verify under the definitions that CAA and SB 54 has outlined under producer definitions. But there's a chance that that converter would be the producer, or if that converter is selling the material to say if it's plastic film, like a company that's then using that plastic film to wrap their pallets. In that case, the company using the film and putting the film into the market is the one who would be the producer on that one.
Okay. Thanks, Russell. I'm going to shift over to a different question now, which is right up your alley, which is what should we do to start preparing for individual source reduction plans in California?
Okay. Step one is to get your regular EPR reporting because that is due right now, and the source reduction plan is due in August. The individual source reduction plan is your commitment to CAA on how you intend to comply with the source reduction law. If you've registered with CAA, there's a template in the portal. You can see what it looks like, how they want to receive that plan. But really, what you want to be doing is thinking about the alternatives that you have. I mean, just to clarify, source reduction is only plastic. So it's all about reducing your plastic weight and your plastic components, both of them matter. And can you incorporate PCR? There are bonuses associated with incorporation of APR certified PCR in certain categories. There are bonuses for reducing your plastic below your 2026 and 2023 baseline years. So you want to be starting to weigh that, um, those incentives versus like what's feasible for you, and also the timeline, because source reduction doesn't have to happen all at once. The 25% targets in 2032 on your 2031 supply. And there's some interim targets along the way as well. And so I would think about a short and medium. 2032 is pretty soon. So probably like a short-term view and a medium-term view, like what can you swap out? What what packaging transformations, bigger things like might you want to make? And starting to think about you think about you've got like a 2x2 with like little bubbles of how big your source reduction is on there. You want to think about like what's the cost? Is this going to make financial sense for you? And then, how soon can you do it? Or how feasible, how technically complicated is it? You want to be weighing all of those variables. Um, this is actually a service that we provide. We're helping some companies out with developing their source reduction plans, both in a super detailed financial model, granular way, and also kind of like a high level way as well. If this is something you're interested in getting more help with, send us a message and we can talk about ways to engage on it.
And if I could just add to that, for those of you who are really just at the beginning of your source reduction journey, we do have some resources on the PCX website. We did a webinar on source reduction last year, which is available on demand, again, at the PCX website. And we also have a source reduction guide. And in anticipation of the upcoming August 1st reporting date, we are going to be holding a couple of webinars and a couple of office hour sessions around source reduction. So plug into your email and keep your eyes open for that, and you can register there. Russell will likely be leading that as well, and will be able to kind of guide you through in a step-by-step way what you need to do to be prepared. Okay, I see another question here. What if a producer has just been considered a producer given gross sales in the last year? When are they supposed to start having proof of source reduction?
Um, so reading between the lines on this one, what I think this is saying is if a producer was not a producer in prior years because they were below the threshold, but now they're above the threshold. So now they're a producer, but like they weren't a producer in 2003. Um, you reread this. Producer giving gross sales in the last year. When are they supposed to start having proof of source reduction? The answer is just like every other producer. Um, it is now. CAA is going to want you to submit your 2023 baseline, even if you weren't defined as a producer at that time. You don't pay any fees on that baseline. That is just to have CAA help understand how much plastic is in the market and to set baselines for producers. But you will have to report on an annual basis. Every year, you are an obligated producer of your source reduction activities. So, how much have you reduced overall? And then for each pathway, like how much right sizing have you done? What have you shifted to alternative materials? Where have you incorporated PCR? Like all of those items are things CAA will mandate that you will have to provide each year, along with short descriptions, just kind of describing what it is you did.
Okay, thanks, Russell. Here's another one that's come in. As far as you know, did it happen that a company's methodology was questioned by the CAA and it had to be revised?
Good question. Very good question. Um, we don't know how many producers there are going to be in California. In Oregon, there were more than 2,000. I would expect that there are going to be 5,000-ish, 10,000 maybe producers in California. CAA has said that they're going to read every methodology. We don't know how feasible that is, if they're using AI to do it or something like that. But they said you should submit your methodology with the expectation that somebody is going to read it. Um, if your methodology is overly simple, like we used sales data and package weights to submit our report, CAA may flag that as, overly simplified. We don't understand what's going on here. You're going to want to be more detailed to explain like where you had all the sales data, where you had all of the specific material weight. CA has guidance on using specific bill of materials versus average bill of materials versus industry benchmarks to estimate weights and components, for example. And you're going to want to explain that. So when in doubt, write more. They said that over and over again. It is possible your methodology could be questioned, and that could flag you for an audit or a review, which may result in nothing, but it could result in what CAA calls a correction. So if your report is wrong for any reason, there's two ways to change it. The first way is a adjustment. A producer can request an adjustment and work with CAA. There's like a case team that helps you like make that adjustment. For example, like on accident, we reported all of our weights in grams instead of pounds, and so our numbers are way off. Like that would be an example of an adjustment. A correction is where a CAA has identified something, and then they'll go back to you and they'll talk about your methodology and question your weights. They may want to see some data from you. And then that correction would also have implications for fees. Like if it lowered your fees, you get a credit for your future invoices. If it raised your fees, you get an invoice from them right away. Um, yeah, your methodology does matter. In short, write as much as you reasonably can to have somebody who's not informed of how you did it be somewhat confident in like how you tallied everything up.
Okay. Here's another one that has come in. Are e-commerce materials in scope if they go out of state?
Um, Generally, no. So if you're a California company and you're shipping e-commerce to Nevada, that wouldn't be covered under any EPR law. If you're a California company and you're sending your e-commerce to Oregon, which has an EPR law, that would be covered under the Oregon EPR law. So you'd report those weights and measures there. If you're to reverse that, a Nevada-based company shipping e-commerce into California and you're above the threshold, you have to report into California for those weights and components, even if you're not based in California.
Russell, this was not a question, but I know this has come up in previous webinars with people who are selling through Amazon and they're not quite sure how much is going to what state. Can you talk a bit about how they can handle that kind of situation?
Yeah, no problem. Um, it's a super common question. A lot of people sell through distribution and they don't know how much is going into one state versus another state. Sometimes they do, often they don't. You can use a population apportionment method to allocate your sales as well. So if you're nationally distributed and or you don't know how much is going to each state, and California is approximately 11% of the US population, you can allocate 11% of your sales into California. And back to that methodology statement, you would definitely want to explain that you don't have like ship to state data. So we use the population apportionment method to estimate the percentage of our total packaging, which is in scope in California. Um, but of course, there's also a gray area in the middle. Like if you are let's talk Colorado. If you are a Mountain West company and you're doing business only in Colorado and neighboring Wyoming, for example, you wouldn't want to use that national apportionment method because it doesn't make sense. Like you would know that you're like only in those couple states, so you would just make an estimate based on, how much you think was going there with the best available information you have, and you'd explain it in the methodology.
Okay, thanks, Russell. Another question's just come in. This is a good one. Are there any penalties or other financial negative implications associated with delayed filing or requested corrections?
Um, in short, the answer is yes. EPR is new. We haven't seen CAA or the state regulators impose penalties yet, but they're clearly outlined in the law and CAA's policies. Like they're definitely coming. Um, there are late penalties, like if you don't report on time, which means you don't get your invoice on time, which means you don't pay on time. There are late penalties associated with that as well. And then if you have a requested adjustment or a CAA mandated correction, and that changes your fees, you would have to pay the difference or receive a credit on the difference. And if that was a gross negligence kind of situation, I'm not sure if CAA would charge a penalty because you were super late in paying your fees. Let's say you underestimated your weight by 99% and you figure that out a year later, it's kind of like you didn't pay. And so I would expect CAA would have some sort of penalty there, but that's a gray area that it isn't fully explained yet.
Okay. Next up, I think we're heading back to the situation where, the shipping destination is uncertain, which is that distribution calculation using national data required, or should you simply state in your methodology that you're only accounting for direct sales?
Um, if direct sales is all you have and you know right where it goes, then you should do that. But if you were going to only report direct sales but not report at all indirect sales, that would be out of compliance for sure. You need to report on all the packaging that goes into California. And so you could use a combination. If you're a, direct to consumer company that also sells through distribution, maybe you'd have part of it through your e-commerce sales data, which is really specific, and the other part is maybe gets apportioned based on your um, national distribution and population adjustment if you're nationally distributed and that allocation makes sense. Um, so yeah, just make sure you're reporting on all the material that's going in the state.
Okay. Here's one more, Russell, a pretty practical one. When will I know my fee obligation?
Ah, um, well, there are ranges out today where you can estimate your fee obligation. And at PCX, we also have a service called Responsibility Intelligence, and we will take your data, transform it, and export all the reporting you need for CAA. And you can see your projected fees like right away, like right in the web dashboard. It's super clear, allocated by SKU and business unit, and all these things you need to make management decisions. But from CAA, they don't provide those estimates for you. So you would either have to calculate it on your own or wait until the final fee schedule comes out. They have a range now. The final fee schedule is going to come out in October or maybe September. And then, or you can wait until January when you get your full invoice. Um, so those are kind of the ways you can estimate it. The folks we've been working with on this, I really, really appreciate the fee transparency of what it's projected to be.
Okay, here's one last question, Russell. To identify what type of plastic you're reporting, does it have to align to APR guidelines or standards, or is it self-report?
Can you read that one more time?
Sure, sure. To identify what type of plastic you're reporting, does it have to align to APR guidelines or standards, or is it self-report?
You report based on the categories in each state. It is different in every state, the categories. Like California has 95 categories, Oregon and Colorado have fewer categories. Um, but the categories tend to combine material types with formats. So like there's an HDPE category for like jugs, there's an HDPE category for like other, and there's a couple more. That is the category that you use. That's the one that's mandated by law. That's the one where you go to report with CAA. There's a box to fill in beside that category. That's how you do it. The only place where APR really comes into the law is the APR certified PCR.
Okay. I think we're almost at time now, and just before we end, I wanted to remind people that we do, for those of you who joined late, we do have some very good resources on the website, some prior webinars that are on demand that you can view about source reduction or getting reporting sorted out for the upcoming May 31st dates. And we will soon be launching a webinar on source reduction as well. We'll probably be doing a couple sessions to accommodate different people in different time zones, and some more office hour sessions. I'm just going to hand it over quickly to Russell to talk about how, if you're really running into some roadblocks and you need some help, how he might be able to help you with some of what he does with our existing clients. So over to you, Russell.
Yeah, send me an email. That is the easiest way to get started. There's a place on our website. You can book a meeting with me. We can talk about whatever your question is. I will use this last second to just do a quick plug for our service offering here, which many folks are finding very valuable. It's called Responsibility Intelligence, and it is a integrated service where it combines policy intelligence. So some of the questions we had today, what's happening in the upcoming laws, keeping you informed on that, making sure you're getting all the exemptions, like not double reporting anything, for example. We have a team of analysts that will take your data in any format that it's in with anything that's missing and work with you. But we'll do most of the legwork to get it all in a place where we can report it in our scalable packaging EPR platform. This is where your data comes to life in here. You can understand what your SKU library looks like, what your jurisdictional footprints in each of the states are, and what your financial allocation is. Coming out of this, you can see, and this is a couple screenshots right out of the tool. You can see your tonnage, your components by material class, your top SKUs, reporting for compliance based on all the categories. They have to report. It's customized for every state because every state's a little bit different. And then there's financial allocation. So if you want to see it by business unit, if you're a food company and you have a drinks division and a snacks division, like maybe your snacks division is really driving all the fees. And so if you want to allocate those costs internally to figure out your actual profitability after EPR on those, you can start to make decisions like that. This is high level intro. Working with a bunch of companies on this. If you're interested, send us a message and we can tell you more.
Yep. Sounds good. Yeah, we're always here. You have my email probably by now and Russell's email. We'll follow up. If we didn't get to your question today, we're super sorry, but we're out of time. But don't hesitate to, send us an email. We're happy to answer and to help out because we know the deadlines are upon us. So, oh, and final thing, in case you guys don't know, that even though the deadline is May 31st on Sunday, the CAA has extended it till Monday. So you get the chance to work all weekend if you need to. All right. That's it for now. Thanks for joining us and stay tuned for upcoming webinars. Take care. Good luck.
Thank you, Lise. Thank you, everybody,
Bye.
for the engagement and questions today.